This is our Forex video blog for February 17th, 2011. One of the first things that we do each day is, see which currencies are strong and which ones are weak. Preferably we want to find, underneath each one's real-time strength and weakness, we have the daily, weekly, and monthly, and the dotted white line symbolizes extreme strength or weakness. Green is strength, and red, as you can see here in the dollar last night, is weakness. Quite a few of the currencies longer term trends are down. The Australian daily trend shifted up, so that was one of the strongest ones, preferably the weekly and monthly. Underneath the daily, down here, the three color strips, daily, weekly, monthly. Preferably the weekly and monthly are up, and then when you see some real-time strength, you go with it, but you don't have any of those today. So, strong Australian at 1 o'clock, weak dollar and weak yen. And so, the highest odds trade and also the Swiss, became strong a little bit around the same time. Buy the Australian dollar and buy the Australian yen. Here you can see this currency was hovering right underneath its 20-day moving average and broke out. Pretty decent place. Anytime you see a sideways rectangle type pattern, you might be in this trade here at 38. The previous day's high and the weekly pivot are obviously major resistance areas, and you have the half number as well. So there's three areas up here around 55 that are likely to stall. And notice as it went up, it didn't have statistically that much strength, and so you exit this with a small profit. If it found support here, oftentimes you have double tops right here. Some traders might have got in again here at the hourly. When the hourly acts as support and breaks out again, you could give that a shot to get in. On a quick scalp, you might have got out of here with 15-20 pips, pull back again, hit the hourly, and this time it just exploded up to the next resistance area, which is a 10-day moving average. Anytime it hits a level and makes a 25, 30, 40 pip move without that much strength, and there's a resistance area there and another one right above you, if it doesn't penetrate that one and not stall here and goes through that, then you can stay with it. The next area is up here. But this hit that level, never went through it. You probably exit, as it starts to come back down here around 70. That trade good for about 30 pips. The currency meter showed that this was one of the strongest currencies, and it had trouble going up. Once it breaks above all this resistance and pulls back right here, you can see that's the most strength it's had all day right here at 10:30, and it's a pretty high probability trade, because this is the most momentum all day. Pretty much, this is signifying that all Australian pairs are exploding up and dollar pairs are weak. So you get into that trade again, and because it's such a big move, most of the time the fib targets are going to act as let me fix that. The fib targets are going to act as resistance. You can see the first one got penetrated. It went just a pip or two above the 1.618, and this is also one of my Fibonacci profit targets that I did last night. So it's very high probability, likely end of this move. And all the time frame trends are up, and that last trade was the best one. You got in here around 82, and it shot up here around 16 to 20. One of our I'll go over that in a future day when we have all the data. That's the Australian yen, and the Australian dollar. Here's the Australian yen. You can see this one also pulled back, found support at the hourly. When it broke out here, you might have went long. It kind of went sideways here with almost no strength. I would have probably exited that myself, probably around break even actually. Pulled back again, double bottom right here at the hourly, and starts to go up. Again, there wasn't a whole lot of momentum, but your next profit target is this level here. Kind of went sideways there for 15 minutes. I probably would have got out here somewhere around 97. It's about a 13 pip move. And once it breaks underneath the hourly, usually you want to look to sell that when it starts to go back down again. This one has a daily, weekly, and monthly trend that's up. And it was also one of the stronger pairs earlier. So if you did sell this, realize that you're fighting the longer term trend, and when it goes down and makes a lower low here, notice there's half as much weakness as it was before. So if you have a chance to get out of this with a 4, 5, 6 pip profit or break even, get out. And when it comes back up to the hourly and kind of goes sideways and breaks out, get into it again. And you can see this time it just shot up, coming up to 11. The Australian was extremely strong, as you can see. Probably one of the strongest ones, other than actually at 10 to 11. This one lost its strength and actually became weak. the Australian and New Zealand were the two strongest ones. The New Zealand daily, weekly, monthly trend is down, so you obviously take the higher probability trade, and the one that has the most things going for it. And you can see this thing shot up from 90 all the way up to 25. Looking at this on a tick chart, if you got into that trade when it broke out, anytime it makes a higher and higher and pulls back, you might want to move your stop up. And you can kind of see a little double top here right at the upper containment band. It slightly went higher high and then pulled back. It's above the upper containment band. On a tick chart, it really lets you kind of, with precision, move your stops up. You could also put your stop underneath this weekly R2, getting out of that trade up there around 17. Now again, the Swiss also pretty strong today, and we had a weak dollar, so obviously you're looking to sell the dollar Swiss. Looking at this currency, you can see it exploded down yesterday. It came back up to a Fibonacci retracement level that I thought might be major resistance, and coming up at 2 o'clock today, you might have looked at a tick chart to more accurately and precisely time this. Let's scroll back to 2 o'clock. You can have tinier stops on tick charts. You can see it went up to that level here. You might have sold it earlier. It only pulled back about 8 pips before and kind of didn't have that much weakness. It kind of comes up again. Usually I kind of wait for sign breaking down underneath its low. For example, I might have went short here with my stop there, and as this thing started to come down, you can see it got progressively weaker. The next fib level is right here. It's at the lower containment band. Pretty decent place to exit that for not the biggest trade in the world, but about 35 pips. And one of our systems is an Elliott two-wave pullback. Anytime you have a super weak currency, you can draw your fibs on one of these minor swings, and usually at the first or second fib level you get a reversal. Because this was so weak, I would have given this a shot. Pulled back, you can see the weakness is kind of lessening, and you get out of that trade with a small win. You might have taken that trade here, and when it didn't stop you out, obviously you're tightening your stop really fast. It came down again. There's actually a little bit of strength here, which means the dollar is getting stronger against other pairs, not against the dollar Swiss at this point. But if the dollar is strengthening against other pairs, it's likely to strengthen against the Swiss. It's at the the lows here with the double bottom. Good place to get out. And you can see it really just kind of went sideways after that. If you held for another hour, you might have made another 5 or 6 pips. But usually, it's a pretty good tool to maximize your profit potential. Now we had extremely weak CAD here at 9. It was one of the weaker ones. Most of us don't really trade the CAD Swiss too much, but we have a super weak CAD. It was weaker than the yen and about as weak as the dollar, and you could have traded that against the Australian or the Swiss. So we would be looking to buy the Australian CAD. And look at this explosive move up. It starts to show this is the most strength it had all day. Broke out over its high right here around 96, and it went up. Let's just say you bought the 9900, went up 70 pips. And if you weren't in that trade, when it broke over the previous day's high, that's a very big sign of a bullish pattern. And when it comes back down and doesn't break the previous day's high, because there's a lot of false breakouts. It breaks above there, then comes right back down. If it can break above there and stay there, and especially if it's the strongest amount of momentum it's had all day, this is also a pretty high probability trade, and you want to draw your fibs on that last move to get an idea of where your fib targets are. We also have 20-day moving average, 10-day moving average. It's also above the upper containment band. Pretty decent place, to get out of your trade. It just exploded through the first one, exploded through the second one, came up to the weekly pivot and the 10-day moving average. It's way above the upper containment band by 30 pips. You almost never want to buy it up here, but it's usually a good place to get out of your trade with the maximum profit. You made about 50 plus pips on that trade. If you bought the earlier breakout, you made another 20 or 30. Again, strong Australian, weak CAD, strong Swiss, weak CAD. So, you could have sold the CAD Swiss. Notice this currency was finding support at the 10-day moving average, had a false breakout underneath there. Usually currencies that are trending down, can't get above the hourly. They're sitting right on a support level where there's buying. When it breaks, whoever had bought the lows earlier and is maintaining this price here, not letting it go down, it's obviously not going up. The weekly trend's down, the daily trend's down. The momentum has been to the downside, other than this little bit of brief amount right here. You can see there was almost no strength whatsoever right before the breakout. Good place to get short, and again, draw your fibs. And most of the time, the first or second fib target's where you want to get out of the trade. In this case, this one has extreme weakness, so it's usually, anytime you see that, it's usually likely to go one more wave in that direction. So if you're, have the patience and discipline to hold, draw your fibs off this move, and you can see it went right to the next fib level. So you could have really done extremely well in this trade. Short around 15, out down here, about 70 pips down. Or you could have got out of this trade when it hit the lower containment band, waited for it to break down again, kind of went sideways right here. On a tick chart, you would have had a little bit more precise entry. Anytime a currency is right underneath a resistance area, you can go short with a little bit more confidence, because your stop can be right pip or two above the next resistance area. And the next profit target level is down here. This is called our trend explosion system.